people ask me, how much money should I give to charity? And I said, well, how nice do you want to be? I mean, you don't give money to charity because you're going to get a tax deduction. You give money to charity because you have an interest in something, or you believe that you ought to share your wealth in that way. And so it's hard to answer that question as a tax advisor, because I can tell you what the tax rate is and how much of a deduction you're going to get and what the tax savings might be for that. But ultimately, giving money to charity is a bad deal, because you're giving away $1 and you're going to get, but that dollar, to give that away, it's really only costing you 75 cents, depending on what your tax rate is.
Don't you think that's where a team approach makes sense? Meaning, to answer the client's question, you might need to rely on the financial advisor to determine, hey, do they have assets they may not spend in retirement, or they don't need today, or their kids, they've already said their kids don't want to, or they don't want to leave it to their kids, I should say.
Absolutely. I mean, that's sort of what I was alluding to, right? Is that you need to know what their ultimate plan is with respect to charitable giving. And that's part of their financial plan. That's not really part of their tax plan. Now, if one of the things that is part of the tax plan, if you have somebody who's 70 and a half, they can take money from their IRA, they can take money out of their IRA and make a qualified charitable distribution, and have it not taxed to them, so they can give the full value of it to the charity. So that's a planning idea that makes sense, and from a tax perspective makes sense.
But you need to make sure they don't need the money to live on in retirement.